UnitedHealth Group stock, ticker symbol UNH. This stock is down 1% year to date and has gone up and down quite a bit so far. Most recently it increased roughly 14%. On the 14th of July, UNH presented quarter results where they beat on EPS and revenue. But analysts think they will miss their next target, so let's see what happened during these earnings. Most people love UNH stock because of the dividend growth. And I understand why, with dividend yield at 1.48% and dividend compound annual growth rate at almost 17%. So could this be the perfect moment to buy UNH stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UNH do? UnitedHealth Group is one of the largest private health insurers, providing medical benefits to 50 million members globally, including more than 5 million outside the US. Along with its insurance assets, UnitedHealth continued investment in its Optum franchises, have created a healthcare services colossus that spans everything from medical and pharmaceutical benefits to providing outpatient care and analytics to both affiliated and third-party customers. If we dive in the most recent earnings report, we see that revenue was reported at 92.9 billion and grew 16% year over year. To me, this looks really good. Earnings from operations grew 13%, which is also pretty decent. Earnings per share were reported at $5.82, which is looking good. The company strengthened the range of its full-year net earnings outlook to a range of 23.45 to 23.75 per share. In here we see the results of the recent quarter versus year over year and previous quarter. The interesting thing is that net margin is a little lower. That's something to keep your eye on. If we check the segment breakdown, we see that healthcare is the biggest segment with 70 billion in revenue. Revenues grew 13% year over year and margins are flat, which is not a bad thing in my opinion. The second segment, Optum, reported 56 billion in revenue, increasing 25% year over year. But operating margin decreased quite a bit year over year, which is thus hard to see, of course. In here we see that eliminations is having a big impact on the revenue, of course, but it is in line with the growth numbers. So it doesn't worry me at all. As mentioned before, operating margin is decreasing, driven by Optum. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week, and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. UNH is a 476 billion market cap company. PE ratio is at 22, which could indicate that they are at a fair valuation right now. Later in this video I will show you my 3 price targets for UNH stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 345 billion and in this graph we see that the revenue went up nice and steady. Over a longer period of time margins are increasing, which is looking really good. Most recently it is coming down just a little bit, so keep an eye on that. EPS is growing really nice and steady. To me this looks pretty good. Analysts expect double-digit growth in the EPS. Again, this is also looking really good to me. And for the revenue it is a pretty similar pattern, but with slightly lower numbers. It is expected to see high single-digit growth in the coming years. Return on assets is sitting at 8%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 13%, which is a great number. It is also higher versus the 5-year average, so that's also pretty impressive. Current ratio is at 0.8, which is looking pretty good, especially since it's really steady over a longer period of time. Right now UNH has 65 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. UNH has 46 billion in total cash, so they can pay easily off a big chunk of their total debt. this looks really good to me. But it's still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, even at a steady and consistent pace. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.48%, which is a decent number. Annual payout is at $7.52 and payout ratio is at 29%. I prefer 50% or lower, so right now they have 71% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 17%, which is an insane number, and one of the reasons why I love this stock so much. On top of that, they increased the dividends for 13 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that UNH really likes to increase the dividends, which is very nice. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio was kinda steady, hovering between 25 and 13%. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare UNH stock with the overall market, in this case the S&P 500. Next to that I added Elevance Health and Humana. On the 5-year chart we see that UNH beats the S&P 500 big time, with 110% return including dividends. ELV also did beat the S&P 500. On the 1-year chart it looks pretty different, with the S&P 500 returning almost 8% including dividends versus UNH returning -3% including dividends. On the 6-month chart it is the S&P 500 with the highest return again, 10% in total, beating all the others in this list. On the 1-month chart it is again looking pretty different, with UNH and the others beating the S&P 500 big time. So bottom line, UNH stock beats the S&P 500 big time in the long run, and also most recently it started to create some momentum too. So is this the perfect time to buy UNH stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 9 and 10% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 5.5, 6 and 6.5%. And for the free cash flow margin I'm putting in slightly higher numbers. For the PE ratio I'm putting in 20, 22 and 24. In my opinion this company has in some areas a moat and is capable of growing in high amounts, making them an interesting company, and also makes me want to pay a higher multiple. Again, for the price to free cash flow I'm putting in slightly lower numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now UNH stock is at $512. I hit analyze and we see a lot of green numbers. We have a low price target of $417 to $463, which is a decent drop from the current stock price. We have a mid price target of $523 to $553 and we have a high price target of $649 to $659. To me the mid price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion on this stock is that they keep impressing me every time. It has a strong moat in my opinion. It is growing in almost every aspect and they are rewarding the investors with share repurchases and growing dividend. To me this is almost the perfect company, but I would love lower prices to be honest. In my opinion they are undervalued, but not by much, so if the stock price falls down under $500 I will probably buy some shares. For now I'm just waiting to have a bigger margin of safety, but I can't wait to buy this stock. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.